Welcome, Tom Jeffries here at HowStreet.com's video channel here on YouTube. Pleasure to have you with us. We're in front of the beautiful Trade and Convention Center here in Vancouver. One of our regular guests at HowStreet.com that always talks to Phil Mackesy is the author of The Collapse of the Dollar, along with James Turk, and this new book called Clean Money. It's a way to look at where we're going with the new advance in clean fuels, etc. Our guest is John Rubino. John, good to have you here.
Great to see you
again, Good to see you. I have to zoom in the dollar because we're looking at some very interesting situations. You and John, Mr. Turk wrote the book, The Coming Collapse of the Dollar. Now it's The Collapse of the Dollar. Are we at that point now?
We're very close. Right now we've moved into basically stage 3 of the dollar collapse scenario. The first stage was we borrow too much money and get to the point where we owe more than we can ever hope to pay off. And the second stage is it all falls apart because of all this extra debt. And that was last year. The third stage is the governments of the world begin to print as basically as much new fiat currency as it takes to avoid another 1930s style depression. And the question then becomes, will that destroy the value of all these paper currencies? Because right now we're pumping out trillions of dollars of new paper currency that isn't really backed by anything. And basic supply and demand says that that's going to cause the value of the dollar and the yen and the euro to start going down. And once they start to fall in a predictable way, the fall is going to become a dramatic drop because everybody's going to lose faith in paper currency and the whole global financial system is going to fall apart. We might not be that far away from that.
Ooh, yeah. Scary. What happens to guys like you and I that are hard-working fellas? We've actually got real dollars in our savings account. I've got, say, $100,000 sitting there. If the dollar collapses, what happens to my 100 grand?
Well, traditionally, when countries destroy the value of their currencies, savers get wiped out. That's what happened in Weimar Germany and in France a couple of times, a few hundred years before that, and the Roman Empire, and literally dozens of other countries throughout history who've destroyed their currencies. Now, there are lots of things we can do as savers and investors to either protect ourselves or actually make money from the process. But one thing that won't work is cash under the mattress, because if we're going to destroy the value of cash, then it won't be like the Depression when that was actually a good investment. This will be a disaster because the dollars that you put away will become less and less valuable until possibly they're not worth anything. So the things that we should be doing is we should be looking at real assets like mining stocks and gold and silver bullion, preferably stored outside our home countries. So if the U.S. or to lesser risk Canada starts confiscating things like gold and silver, we're protected because our bullion is in a bank somewhere else. So there are things we can do, but we have to think it through. We have to consciously take steps to avoid being wiped out by the destruction of our currencies.
Recently they had a $100 billion bond auction. I think it were 10-year notes in the United States. It was a big yawn. That was where they're raising all the dollars to put into the system. What's next, John?
Yeah, well, somebody had a good line lately that every new treasury auction is now an event risk. In other words, we're pumping out so much paper, we're selling so many treasury bonds and notes that eventually the market's not going to want to accept them, and we're going to have to accept a much higher interest rate, and that's going to send the global financial markets into turmoil, and that could happen at any bond auction from now on. So we never know when it's going to hit, but it's liable to hit in the not too distant future.
I'm looking at corporate yields have gone to the moon for people out there looking at corporate bonds. You're getting 8-10%. As a matter of fact, one of the large media companies here in Canada had to raise a short-term note, but they had to pay 12%.
Yeah.
That sounds like a big correlation to what you and I are getting in our savings account.
Yeah. Well, one of the things that is normal in the beginnings of an inflation is that people lose faith in bonds, because bonds are basically instruments that pay you a fixed amount of currency every year going forward for a set number of years. Now, if the value of the currency goes down in which these bonds are paying, then the value of the bonds go down. So what we're seeing now is the early stages of that process where people say, well, I don't want to own 30-year treasuries or 25-year corporates if the value of the currency that those bonds are going to pay me will be a lot less, be lower going forward. And so that means people are demanding higher interest rates, which is what we're seeing now. Treasury rates in the US are going up. Like you said, corporate bond rates in Canada are going up. And if that process goes on even just a little bit longer, that pulls up all the other interest rates in the system, and it'll just crush the global financial system, because especially in the US, we've got a lot of mortgages that are still resetting. We've got this wave of Alt-A mortgages that have to reset in the next year. And if interest rates are higher, people won't be able to refinance, or they'll have to accept a much higher interest rate, and that'll destroy their disposable income, cause them to spend less, send us back into a recession. So higher interest rates are kind of the key to the whole thing going forward, and that's what we need to be watching.
A quote from Meredith Whitney, the economist of the United States, says the figure she's got is $1.7 trillion about to be sucked out of the credit wheel, about 57% reduction. Where does that leave guys that are out there looking for a credit card?
It makes it harder to get a credit card, which, is that a bad thing, all things considered? I think it should be a lot harder to get a credit card. But the ultimate effect of that is that people will have less disposable income, and it'll be much harder for governments who are trying to reflate the economy to get consumer spending to come back. So probably what will happen is that the economy will turn out not to be nearly as resilient as they hope it will be, especially in the US, but also in Europe and to a lesser extent Canada and Japan. And the governments will be forced to come back with even bigger stimulus plans over the next couple of years, which will mean a bigger flood of government debt, more money creation, and a bigger problem for the currencies of the world. So we're by no means out of the woods yet, and we're probably headed for more trouble down the road after a brief respite here when things seem to be getting better, but probably aren't.
By the way, apologies for the noise in the background. It's the SS Statendam, first call for our tourist heading to Alaska. John and I are leaving in just a couple of minutes. I noticed you brought it up, the Gold Corp put out an issue, was oversubscribed. What does that say to you?
Well, it says the markets are starting to throw money at the senior miners now. The big mining companies, because gold and silver are up, are able to raise a lot of money. And a lot of them are doing so. And so they're going to put some of that money to their existing properties and bring them online. But a lot of that money is going to go to buying out the juniors who have good properties that enable a big mining company to instantly increase its reserves. So what we'll see going forward is an increase in mergers and acquisition activity in the gold mining sector, where the big guys buy out the little guys at nice premiums. So there's liable to be a correction in the short term in the juniors just because they've had a nice pop. But it wouldn't surprise me at all to see them, after this correction, should it happen, just take off when all the big guys start buying them out. So we'll see a lot of 300-400% moves in these little companies once the Gold Corps and the Newmonts of the world start looking around for acquisition candidates, and everybody else starts going, all right, where's the next one? That's when you see a flood of money into the juniors.
In your book, Clean Money, we had on our flood here is talking about how to make money in the new economy. Where do you take carbon trading? Do you buy this whole thing, or is it a bit of a boondoggle?
Carbon trading, the more you look at it, the less effective a way of lowering overall carbon emissions it appears to be, because it's very complex and it's open to a lot of corruption and bureaucracy. And I think a simpler way would be just to, if we decide as a society that we want to produce less carbon, let's just tax it. And that would be a simpler, easier way. And then you can even make it politically palatable by rebating all the tax money to consumers. So it's neutral in terms of the impact on the average person's income statement and balance sheet. But it still has the effect of raising the price of carbon and making clean technologies more attractive and lowering our overall output of carbon. So I would say that's a better idea, but it looks like we're going to go for and try carbon trading in the near future. And that's going to create some opportunities in terms of some of the trading houses that are big in it, and short, long plays in companies that are hurt by increased carbon taxes versus companies that benefit from it. So there's a lot of plays available in it, but we don't know exactly which way we're going to go with it yet.
It's always good to talk to you. Phil Mackesy talks to you every week here at HowStreet.com. Remind you again, John Rubino's new book is called Clean Money, Picking Winners in the Green Tech Boom. Mr. Rubino also is the author of Dollar Collapse. His website is dollarcollapse.com, and his book is The Collapse of the Dollar, along with James Turk. Good to see you, John. Thanks for your time.
Great, Tom. Thanks.
Tom Jeffries at House Street. Thanks for taking the time.
Comments made on House Street Video and HowStreet.com are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at HowStreet.com. House Street Video is a production of House Street Media Incorporated.